Good evening. Ira Epstein, and here we are with your metal market wrap-up. And this wrap-up is for the evening of Tuesday. And we're at the 19th of March, 2024, the time 5:25 p.m. Central Time. Might as well put this out because I already know, what we're most looking for is what's the Fed going to do tomorrow. Now, the big question is it going to be the dot plot shows 3 cuts staying in place? 2 cuts. That's pretty much where the market has everything centered on. I doubt that anyone's looking for the Fed to do an increase from there. In other words, go to 4 cuts. I don't see that right now. And what I don't see is the Fed chair in the press conference really altering what he's doing. I think he'll sound the same that he did at the last meeting. They're data dependent. They were looking for a bump that could happen with the CPI year beginning events, PPI, same thing. And now they're hoping the trajectory, and I want to use that word, hoping and looking for, the trajectory will be that inflation starts coming down. There might be some questions also asked about the balance sheet runoff. That would not be a surprise either, because there's such a balancing act you have to do here. Does it matter to the stock market? In most cases, no. Traders just look at each of the breaks as a buying opportunity. After we get whatever is going to happen, you get the yin-yang impact tomorrow. Remember, when the Fed announces at 1 o'clock Central Daylight Time, what time is that in Europe? What time is it in Asia? So it goes around the horn, if you will. We get the statement, the dot plot, then about 20, 30 minutes later, the press conference is going on. It goes to Asia. They look at it as they wake up eventually, moves to Europe. And then when we come back at 6 in the morning, whenever, you start seeing the activity picking up, and it either's confirmed, not confirmed, whatever's going to happen from there. When I take a look at the gold market is pretty flat going in. I mean, here we are. We're already on Wednesday trade, and the market is up 0.1% for the week. When we look at the action here, the market you can almost see the trend coming down. The question is, will it pop through that and get an uprise? You'd have to take out the high that I'm pointing to right there to tell me that anything to break this minor downtrend is taking place. If the market wanted to work a lot lower, as I've shown you each day, the 18-day average in red keeps moving higher. Yesterday it was 21.27. Today it's 21.33. Day after it'll be near 21.40. It doesn't have to go there, but that's the logical first support should the break continue. As for the resistance, it's way up here at the 22.37 level. And in momentum, you've lost the upside momentum. In other words, the bullish embedded reading was lost. So unless the market's going to go take out this high first, odds favor that before that takes place, and that's what the odds favor, price and the 18-day average will come together. We'll see if that is the case. When we look at the gold-silver ratio, silver has been stronger than gold. You can see that. You're bouncing away now up to the 86 level. You got very close to 85 ounces of silver needed to buy an ounce of gold. And the lower that number goes, silver is more valuable. Silver kept its embedded reading. So as a market technician, if you were to say to me, which is the stronger of the metals? The silver. And you had a bullish crossover. Do you see how the 18-day average just crossed over the 200? The other day it got over the 100. Now it's over the 200. And you get a real bullish situation in terms of moving averages. If you get the 18-day average followed by right under it the 100, not the 200, and then the 200 below it. I still say this is proven to be, from the looks of everything I see on the chart, a major low in the silver market. You'd have to take this out to prove to me that that isn't the case, and it could be a multi-year low over time. The copper market has recently been on fire, and I mentioned yesterday, I said, I know that people always say, the market's going to just keep going up. It's not going to pull back into those Bollinger Bands. I will repeat what I constantly say. They build Vegas on those type of bets. In other words, 95% of the time you're going to pull into the band again. And it's the same as saying it's not doing it, it's going to run. You will be right 5% of the time, and you will walk through a casino and you'll hear somebody want a big jackpot. Am I right or wrong? That is how these things work. The trend is certainly up, and you are on the close. You lost, maybe? Let's take a look. Did you lose the embedded reading? No. You're losing it tonight right there. It's too early. We don't know if that's going to stay lost. So if it stays lost, the odds are just like I showed you in the gold market, that price and the 18-day average try to come at each other. But until it's lost, you still have the pattern of bullishness at work in the market. So it's got to prove itself. In the platinum market, this just proved too much for the market. The 100-day average in green, the gray, the 200-day average in the Bollinger Band. And you've had your correction. Now, depending on what everything wants to do, we'll see if this type of metal can get a bid in the marketplace. Sooner rather than later, we'll be leaving the April contract and moving to I think it's the June contract that we'll be going to next. In the dollar index, yesterday, do you remember what we did? Market closed over these averages, and what I said is now you've got trend up, higher lows, higher highs, bias up. If the market wants to fight, this will be the battleground, the 100-day average and the 18, and if it wants to go up from there, well, maybe it gets to the upper Bollinger Band again. Just a repeat of what I said to you yesterday. Now, here's what you have working for you tomorrow. You get the Mortgage Bankers Association coming out at 6 in the morning. We get the Fed decision at 1 o'clock, and about 20 minutes later, the press conference begins. So you want to keep your eyes on all that. Here's what we have for you in the meantime. You might want to take a look at the free offers we have on our website, and there's a slew of them. You're only seeing 3 of the rows here. It keeps dropping down. You see these blue lines? You simply click on one of them. It puts it into a cart for you. At the bottom of this page, you then put in your name, your email address. We know what's going to happen. You click send. If there's anything else that you want from us, let us know. And within a day or so, we typically get everything out to you via email. And again, you can choose from our charting software, the courses. One of the things that I love is our, if you will, daily QT price counts. If you've not seen these, this is a study unique to us, and I think you will find the Linn Group study on this quite unique. It gives you an idea of where the market's going in segments once a trend sets in. It's not about buy here, sell there. It's about get out here, get out there. Do you understand the difference? So many times you look in a chart, where might that go? Pretty cool way to do it. And of course, some of our other free courses. So again, all you need to do is go to iraepstein.com, free offers, or move your cursor to the top up here. Click away at that point, and I'll see you tomorrow.